Hello and good afternoon. So we are now live. I'm just going on to my settings to make sure we are live. Good afternoon, one and all, and welcome to today's HK2UK live session. We will be taking any questions that you have. So if you do have any questions, then make sure that you post those questions on the chat box, whichever platform you're watching from, whether that's on Facebook, YouTube, Twitter, LinkedIn, Dailymotion. We are on several product launches now, platforms that you can pose your questions to. So make sure that you pose your questions to us and we'll answer those as best we can. In the meantime, I am going to allow the panel members to introduce themselves so that you know who they are and their level of what they do and how they can help you as well. So let's start with Natalie. Natalie, over to you, good self.
Thank you, Simon. I am Natalie Haydon-Yeung. I am an associate family solicitor at a law firm called Geldard. Geldard are a full servicing law firm. We have offices in Nottingham, Derby, Cardiff, London, and we can basically help you when you come over to the UK, if you've not already come, on a range of matters. So we can help you if you want to purchase a property, if you have any business matters, if you want to make a will or what's called power of attorneys, and even family matters. I am myself a family solicitor. So whatever you need, Geldards are here to help you. And I will pass over to Chenji.
Hello, everyone. Third session. Happy to see everyone again. My name is Chenji Meng, as some of you might already know. I'm a wealth manager at AMG Wealth Management. We are based in the Midlands in Derbyshire. We're a full service wealth management company providing our clients with holistic advice on their finances, on matters such as investments, asset structuring, on their pensions and life insurance. Personally, for this group, Hong Kong to UK, I have moved to many countries throughout my lifetime, and so it has a personal touch for me to kind of show the pains and the lessons that I have learned along the way, and to hopefully share that with everyone that is here today. And I shall pass it on to Nigel.
Thanks, Chenji. My name's Nigel Smith. I am an associate solicitor at Paragon Law. Paragon Law is a specialist immigration law firm. We offer services in the full range of immigration, corporate, personal immigration, and human rights work. I lead our human rights team. I lead our personal immigration team, and in that team, we deal with a number of different cases, including family work, individual private life matters, appeals, and in particular, Hong Kong B&O work. So we are assisting applicants to apply for B&O visas and leave to remain in the B&O category, as well as doing extension work when the time comes, indefinite leave to remain and citizenship. And I'll pass over to Simon.
Yeah, hi everybody. My name is Simon Hodgson. I own and run a company called Funded. We are mortgage brokers. I've been a property investor within the UK for over 20 years now. I started learning property investing, as I say, around 2000. I bought many properties, refurbished them. And I guess I'm here really to kind of dovetail with Chenji. So once you've kind of got your more traditional investments and finances in structure, the possibly number one next the investment that most people in the UK try to make is property. So really, I'm here to bring sort of an angle on property for you guys, potentially coming across from Hong Kong, or even staying patriated in Hong Kong, but investing into the UK property market. Yeah, typically I work with specialist lenders, those lenders that do things that maybe the high streets and the more mainstream lenders don't do, which are more relevant to you kind of guys, I guess, as you kind of look across the land and water towards us. And now I'm going to hand you across to the host with the most, Mr. Simon M.
And good afternoon, and thank you ever so much, everyone else. My name is indeed Simon Misiewicz from Optimise Accountants, and we take a holistic approach to international tax planning. If you are moving from Hong Kong to the UK, it's one thing to be tax efficient in one country, but ultimately you want to be tax efficient across the globe, and that's where I come into it. This is a live session, so if you do have any questions, then please ask your questions. If you're watching live and you find this useful, don't forget to press the like button or just raise a comment, say hi, and then that just kind of gives us a bit more of an inkling to who you are, and maybe even if you say why you're watching this show, that would be useful. I'm going to take the questions from the floor, and we have some pre-programmed, but if you have questions, please do type them in and we'll come straight to you. So the first question that we have is, what are the biggest mistakes of a B&O visa application? And it can only go to one person to begin with this show with, which is Nigel. So, people are obviously doing visa applications themselves, but is it the right thing for them to do? And what are the biggest howlers that you see?
Simon, sure. Well, there's quite a few things that can go wrong, but I'm going to mention three things. First of all, the actual process, the application process is not straightforward. There are different ways of doing it. You can use the UK immigration app to register your biometrics using your Hong Kong B&O or other passport. That system doesn't always work, so sometimes then you have to use the manual process where you make an online application and then attend an appointment for biometrics. And sometimes you have different family members. One family member may not have a biometric passport, and therefore you've got to try and work out how you're going to make it all work for the family. You have to apply together. So there are some things that you need to be careful about when you start the process. Bear in mind that you can always switch out of the biometric registration process and use the manual one, when you're making your visa application. I do find that query comes up often, and certainly on the industry forums that we belong to, there are lots of queries about glitches that happen, in the process. The second thing I want to mention is the need for family members to apply together. And this is a critical issue which many have fallen foul of, and that is if you don't make your applications together, then your family members potentially won't be able to join you. So that's a critical matter of making. Now, you can't apply on the same form with family members. You've got to make individual application. And the main applicant has to get their registered number, their GWF, if it's a visa application, or UAN in country, and then use that on the subsequent applications, which they need to make straight away. So there are some concerns there that people don't get that right, and that can obviously lead to big issues. And finally, and perhaps most importantly, is the supporting documents that people provide in applications. And this is most frequently where applications are refused. It's not necessarily because someone's not eligible in terms of having a B&O passport and meeting the criteria, but it's more about simply not evidencing it properly with the right documents. And this can be demonstrating that Hong Kong or the UK is your permanent home and providing adequate evidence of that in the application. Some people may omit to provide a TB certificate that is less than 6 months old in the application. Evidence of your family relationships. So if family members are applying with you, that needs to be properly evidenced in terms of marriage certificates, birth certificates, and so on. Anything that's not in English needs translation. So if you don't provide a translation, that document will be ignored. Other evidence is are people in the same household as you, and have you properly evidenced that in terms of residential evidence. Financial evidence, you've got to show you meet the maintenance requirements for the size family that you've got. Now that's different for every family unit depending on the number, and there's a formula that needs to be worked out in terms of showing that you've got the available funds at the right level. So those are some of the key things where we see people come to us with a refused application, and it tends to be not that they're not eligible, but they've just not got the right documents together. So, from that point of view, it is worth getting advice and making sure that you are doing it properly.
Nigel, on that point, I mean, if someone has come to you because their application has not been successful and it's pending, I don't know, for them to start a job, the children start school, how quick is the process to rectify their issue, or is that what is the length of a piece of string?
Well, it comes down to looking at different cases and whether or not there's a right of appeal, or whether it's an issue that should be appealed, or whether a reapplication is the quickest and easiest way to do it. And often for these entry clearance type applications, our advice is, if it is just an evidential issue, if it's something that can be remedied, if it is a mistake that was made in the application, it's usually quickest and simplest to make another application and to have it processed again.
Right, very good. Any other panel members want to interject with anything? Normally you put your virtual hand up, so I do know if you want to interject, but is there anything that stands out for anyone else based on what Nigel said?
Yeah, I was just going to ask Nigel, does that mean that someone would have to pay double the fee if they were to do it wrong the first time and then have to rectify it?
So the application fees are non-refundable, so that they would be paying that again. The big charge in this process is the immigration health surcharge. Unfortunately, that's refunded if your application is refused. So you're not paying twice, but you are paying the application fee, which is a lower and more affordable amount.
Okay.
Doing it again, yeah.
Thank you.
Good question. Good question. So let's imagine that someone has been successful with the B&O visa application. There is obviously after a 5-year period, something has to happen. Nigel, what has to happen after 5 years of someone coming to the UK?
So the Hong Kong B&O visa is only available for a 5-year period, or potentially for a further extension if someone is needing to get to a point in which they're able to apply for settlement for indefinite leave to remain. And that's the critical thing that's got to happen after a period of 5 years residence in the UK in this category. One applies for indefinite leave to remain, is what we call it. And that gives someone a right of permanent stay in the UK. It's not citizenship, but it is close to it. It allows you to stay here unrestricted, so no further applications, no more immigration health surcharge, access to public funds, no restrictions. And so that's the application that needs to be made after 5 years residing in the UK. And for that, it's really a matter of proving your continuous residence. And continuous residence means not having been absent for more than 180 days in any 12-month period. So that's really important for people coming over to bear that in mind. And there's also a requirement to pass what we call the Life in the UK test here, and to show that you are at a relatively high level of English language speaking, which for most people we're dealing with will be fine, but there is a test required for that. So those are the additional things that one needs to look at in preparation for that after 5 years.
On that 5-year review process, have you seen anything that has jumped out to say, oh, this application has failed because of this reason, other than ones that you've described?
So obviously we're only dealing in other categories of indefinite leave at the moment because no one has yet got to 5 years on a Hong Kong B&O, but generally they all work fairly similarly. And it is usually the absences that can be a problem for people, that they've they've fallen foul of that requirement. Character issues, if someone has been charged with a criminal offence and been found guilty and it's within a certain time frame, then that can also create problems. But generally, if you're here in this category, there is an assumption that all being well, you should be able to reach that point. So those are probably the only things that we tend to see come up.
So Nigel, I've heard from a personal experience, I will need to take that Life in the UK test soon. I've heard interesting stories about the questions, anything from pubs in the UK to the Queen. And kind of give an example of what are these kind of questions look like. These are not textbook questions. These are actually quite Life in the UK questions, aren't they?
They're very specific questions, and the irony is that most British nationals wouldn't pass it without studying up on the questions. They cover things like statistics such as the proportion of Asians living in London and things like that, which are not everyday facts. But, you know, the good thing is that there is a publication that's put out which has all the information, and it's not arduous. It's just a matter of reading it and having someone test you on it over and over. And then we very rarely see people who don't get through the test, if not the first time, at least the second time.
Wow. I had no idea that was the case. That's really bizarre.
Yeah.
Okay, so keeping on that theme, Nigel, I appreciate you've done an awful lot of time talking here, so I do apologise. And for anyone listening in, if you've got any comments or questions or thoughts, then please do share those on the live programme. We will get back to you for sure. Or tell us your own experience. That will equally be fascinating reading for the panel members. But the panel members spoke this morning, Nigel. We all talked about 2021 versus 2022 and the whole visa, and we all felt that it was probably a better thing to do it in 2021 rather than leave it till the latter stages of 2022. Do you want to share what the panel members were talking about on that subject?
Well, I mean, there's always the suggestion that when you are eligible for in a visa category, you should take steps to engage with it, because things are fluid. They do change, and no one can predict the future. No one knows whether there'll be amendments to the appendix in the immigration rules here in the UK, constraining what can happen in terms of coming to the UK as a Hong Kong BNO. Likewise, the situation in Hong Kong with the authorities there could change, and there could be further constraints in terms of leaving. So the sensible advice is, if this is something that you're planning to do and there's a way forward to do it now, then one should take those steps and make the application and get the visa and come to the UK, just because of the uncertainty. There's been updates to the rules even recently, so these things are not fixed. They do change, and we know that the political situation in Hong Kong with the authorities there is potentially volatile, and for that reason it seems to me a no-brainer to proceed whilst the options are there, whilst you can do so.
Yeah, I think it's fair to say it's best to be proactive rather than reactive, which could be the case in 2022, is with the feeling I had. We'll move away from that topic, but we'll move on to something slightly different. Give Nigel a rest here for a second. But the question that's come through, and actually a question has come through live, so why don't we tackle that head on? So this is from Max Cho, who is a regular fan follower of our live session. So good afternoon, Max. Max has asked a question, actually, Nigel, so you're not off the hook at all. Max has asked the question, who needs to take the Life UK test? I have a baby daughter. Does she need to take it?
No, it's only for those 18 years of age and older, up to the age of 65. So if you're within that age bracket, you're required to do so, otherwise you're exempt.
So if your age is 65, you can get away with it.
That's right, yeah.
Wow, okay. There you go, Max. So I doubt you're in that age bracket, my friend, but there you are. So the question that we're going to ask here was, can you invest in property whilst remaining in Hong Kong? I'm going to go to both Simon, Hodgson and Natalie here, and then over to Chenji, because I think there's different dynamics a bit about this particular subject. But Simon, over to you first about mortgages. If someone is in Hong Kong investing in UK property, what do they need to consider? You're on mute, Simon.
Beg your pardon, everybody. Sorry about that. I was trying to keep the noise from everybody while I was doing something, getting ready in the background. So from a mortgage perspective, even if you're a UK citizen living in the UK, paying taxes, to get a mortgage on your first house as a buy-to-let isn't the easiest thing to do. So to do it as a Hong Kong national while still living in Hong Kong, even if you don't have any intentions of coming to the UK, kind of does add to the layers of complexity. So what we have to do is go to the real end of the specialist lending spectrum, which are, there are a few good lenders out there that will do it. Not your average broker will know about these and be able to access them. But yes, in a short answer, it is possible to get a mortgage, still live in Hong Kong, not move to Hong Kong, and own investment property with a buy-to-let mortgage on it. There are naturally some tax implications potentially if you're looking to move to the UK at any point. It might be worth reaching out to someone like Simon, because buying an investment property ahead of a property to live in might not necessarily be the right thing for you to do, potentially. There are all sorts of tax things you've got to work out. But yeah, in terms of, I think this kind of covers it from a mortgage perspective. Natalie, I guess you're going to look at conveyancing. How does that shape up compared to a standard UK transaction?
Yeah, I think that with the conveyancing side of it, I know that that's definitely doable. There's obviously some more regulations, and for example, we need obviously the same evidence of funds, but everything's a little bit stricter. But in theory, there's the conveyancing part is actually relatively easy. The two key legal points that I think when I saw the question is this. The first thing is, it was back to what we discussed actually in one of the other sessions, which is when someone wants to invest. In my experience, I found that it's not actually someone that just invests the property in their own name. Typically, they will do it either with a family member, or they'll do it, via a business or a different way. And it goes back to what we said before. And it's this, you need to be very careful about what are you contributing and how are you protecting then that interest. So if, for example, husband and wife, it's the husband that says he wants to invest it, but he wants to put it in the wife's name for whatever reason, tax reasons perhaps. The question is, you always have to think about, especially as a family lawyer, what happens if they separate? So if you look back at the old videos, it's really a case of thinking about, in England and Wales, we have things such as prenuptial agreements, postnuptial agreements. They are essentially like contracts. They're like documents that regulate what happens to properties if you were to, unfortunately, have a marriage breakdown or if you were to separate. And if someone is going to be putting in a lot of money, like the husband in my scenario, then you're going to want to protect that. So that's one of the legal principles I don't think that people necessarily think about, because as I say, the actual conveyancing part is relatively easy. And when you do go for conveyancing, the conveyancing solicitor should talk to you about your options in respect of that. The second thing is something I've also talked about, which is a will. If you're going to have a property in a different country and you're still going to live in Hong Kong, you need to make sure that that property is covered under English law. So with wills, the best piece of advice is to make sure you get expert advice early, and to ensure that you probably will have two wills. You'll probably have a will existing in Hong Kong because you'll have assets there, but then you should also ensure that you have a will that is that works alongside that Hong Kong will, but in England. So that's the other point. And then I put a big circle to myself about tax issues, which is just echoing what Simon H says. Anytime I hear anything like that, the biggest thing for me is that there are financial and tax implications here that I can't advise you about, but obviously very, very clever people like Simon M can.
I wouldn't say clever, but I think, in terms of the tax consequences, if you have investments in the UK, then it will obviously be taxed in the UK. Fortuitously, there are no ramifications in Hong Kong because you are not taxed on any foreign earned income. So sometimes I do see a lot of people that invest in UK property without really thinking about the tax consequences, and then don't submit tax returns because they think it's quite a small tax to worry about. And that's not always the case. Tax will also change depending, we talked about in this example of staying in Hong Kong, but so let's imagine that you move to the UK from Hong Kong, then all of a sudden that can change, whereby you're starting to have to submit tax returns because you have property income. And depending on if you want to use a worldwide basis or the remittance basis. Now, it's a big subject, so I do want you to research on those 2 points because tax can be quite tricky to navigate through. But that's not really a session for today, for sure. But Natalie, one thing that I was going to ask you the question about a will. what should happen if someone dies. I guess they are one of the things that they should use this, make sure that whatever will they have in Hong Kong is replicated in many ways in the UK.
It has to be consistent. That's absolutely right, because it's no good having something that completely contradicts one another, because the difficulty is that person's going to be dead, and it's going to be the family members that are going to have to rectify it, and it's going to be them that really loses out. So you have to get really real specialist advice on that early on. And I'd say that, if you're looking to buy the property now, get some advice early on, and then at least your options moving forwards.
There is a connected question actually, talk about tax, and it's not necessarily, and Chenji, I'll bring you into this one. For anyone that is going to be moving from Hong Kong to the UK, there is this period of time, which is 15 years, where you become domiciled. And people living in Hong Kong, when they hear me talk about inheritance tax, will look at me blank, because you don't have that in Hong Kong. But when you die in the UK, and you as an individual have assets more than £325,000, and when I talk about assets, I talk about net assets. So from E's point, looking at a property that you own, like a home, that's value of £500,000, mortgage £100,000, means the net asset value is £400,000. Well, on your death, the excess of 325,000, 75,000 in this example, would be subject to 40%. That's right, 40% in tax. So as Chenji jokes before, is make sure that you update your will to include Uncle HMRC into your will writing skills, because that's what technically you might be able to do. But the big thing is when people move from Hong Kong and they've got significant assets, and the big question is, well, do I bring them to the UK? And I often say to them is, well, you have to be a bit careful of dying in the UK, because your assets in the UK will be subject to this inheritance tax. But you have this period of time of 15 years whereby your worldwide assets would not be subject to inheritance tax. So you might want to leave assets offshore for that purpose. But Chenji and I discussed something that was even more sophisticated, but I think easy to explain on this show, Chenji, about the property excluded trust, which let's bring this to an example. But someone's got assets in the UK of £100,000. It's not subject to UK inheritance tax. But let's say you've got £10 million worth of estate value in Hong Kong, that would be subject to inheritance tax after 15 years in the UK. So how does someone like that protect those assets, Chenji?
Oh,
Chenji's on mute as well. Chenji, we're all doing it.
We're all doing this today. No, thank you, Simon. We are indeed, actually, this is a very complex subject with a lot of legal, tax, and also financial advice related. So kind of like to sort of, hopefully I can make it easy for everyone. But if there are any questions, please do put it in the chat box, and, I'll try to answer that as a follow-up as well. I think, first of all, when I came to this country and I learned about inheritance tax, I was very taken because I thought in the beginning, inheritance tax will only be applied for all of the assets that you have in the UK. But as Simon Misiewicz has said, no, indeed, you have to pay on all of your worldwide assets. So if I have assets in the US, which I currently do have, and after living here for 15 years, then I have to bring my US assets into my net asset calculation, which might put me up that threshold, and I will have to pay 40% tax on the amount above 325,000. Now, there is one aspect of planning that we can do, and we do this extensively for some of our clients who have significant assets abroad. It's called excluded property trust. So before you stay in the UK for 15 years, so remember this number, 15 years, it's very important, because that's, again, if you stay here for 15 years, you will become what's called a UK deemed domicile. You don't have to be a UK citizen, and you might not even have to be a UK resident to become UK domicile. But once you do, it means you are subject to inheritance tax on your worldwide income. Now, before this happens, when you can set up an excluded property trust, an HMRC, which is the Inland Revenue in the UK, they will say, okay, you were not a UK domicile in the first 15 years, and all of your assets actually don't belong to you, and they are not in the UK. So this is what the trust is about. This trust will own your properties. It can be properties, it can be stocks and shares, it can be cash as well. They cannot be in the UK, they have to be offshore, usually, somewhere in Jersey, going to an island. And you have to do this while you are not a deemed UK domicile, right? And effectively, you are giving up control of this to the trust. And, without going into more details about how trusts work, but you can be a beneficiary of that trust, which means if, for example, you have a rental property in Hong Kong that you don't wish to bring to the UK and you are still receiving income from it, you can transfer that property into the trust, and you will still continue to benefit from the income that the property provides you via the trust. It is essentially just a structure for you to keep your assets outside of the UK. Again, this is a very sophisticated part of planning, which involves solicitors, which involves tax advisors, and involves a financial advisor too. So if you do have any questions, please do follow up with the panel members and myself here. So yeah, I hope I've relatively explained this in an easier way, but there's no simple way to really touch this subject on.
I mean, one of the things that I talk about with clients is, and let's mention you have come from Hong Kong to the UK. One of the things you could do is, after the period of 13, 14 years, is then to identify another country to move to. So a lot of people have done the opposite to Chenji, whereby they've moved from Hong Kong to the UK, then onwards to the US, almost kind of go through the motion of travel. And the reason for that is because the US has a totally different US estate tax, and it's almost $12 million before you subject to their estate tax. And this is where I would say you do really need to appreciate the different dynamics of tax in each and every country that you want to look at. So please do that, and do yourself a favor when you come to tax planning. You might not have to use certain vehicles because you could just leave. And one of what our clients, interesting enough, on the 13th year of having conversations, moved actually to Portugal. And there is obviously golden visas over there. So it's certainly worth you thinking about that. Talking about protection of assets and wealth. There is, and we touched upon this earlier about couples separating, Natalie. How on earth does someone protect their pensions if they're going to go through a divorce issue? And again, maybe Chenji, if you comment on that one as well.
Yeah, so I think first and foremost, the idea that people will separate after they've already gone through the emotional turmoil of leaving the country that they've lived in for many years, it's really, really horrible to think about, and I really hope it doesn't happen. I think that what I say is just something that's I'd like them just to keep in the back of their mind, really. And even if it's sort of it happens to a friend of a friend or something, it's just something that they can sort of talk about. But insofar as pensions are concerned, they're really, really tricky assets. The divorce courts in England and Wales, they treat them in a way that they can be split. So in a long marriage, the starting point will be 50-50 division of the assets. Now, without getting too technical, because we'll lose all the audiences, you can split assets in different ways. So you can split it based on the fund value, or you can split it based on what each party would get on their retirement by way of income. So the easiest way to protect your pension and to watch it accrue is to basically each party have your own pension. So be very clear about that. You can both You can both contribute to one another's pension, but make sure that they're both equal and, you know, accrue them that way. In reality, that doesn't happen. We know that. But what interests me is when these people from Hong Kong move over to the UK, they are looking for jobs, a lot of them. They may end up working for organisations such as the NHS, or they may be teachers. I know myself from speaking to a fellow teacher in Hong Kong that she's going to move over and she wants to also be a teacher here in the UK. Teachers' pensions, NHS pensions, they're notoriously great. They're really, really good pensions. So with those, it's a case of, well, how do I protect them in case something bad does happen? So it comes back down to exactly what we discussed before about these contracts or these other documents that you could get prepared by people like me, family solicitors. And in this case, we could have what's called postnuptial agreements. So if they're already married, we could have a postnuptial agreement regulating the assets, including pensions. We could regulate loads of things, you know, specific contributions during the marriage, etc., which means that when or if the relationship did break down, the starting point is we'd be saying, well, we both signed up to this. It says that I should keep my pension, you should keep yours, I should keep my 100,000 that I contributed towards that property. That should be the starting point. The reality is that what I tell clients, and they don't always know, is that they think that these sorts of, I don't know if Hong Kong people are that aware of prenuptial agreements, postnuptial agreements, but even here in the UK, they're not that popular, because I think that some people still think that they're only reserved for the rich and the famous, whereas that's simply not true. If you are going to spend a few £1,000s to essentially try and protect £100,000 plus some pension of £300,000, it is most definitely proportionate and worth doing. So in summary, the way you do it is the easiest, most simplest way is to accrue your own pension, ensure the partners can contribute to one another's, but also think about these postnuptial agreements. If you're not married yet, prenuptial agreements, and if you're living together, you could have what's called living together agreements as well, which regulate your finances.
Natalie, just a question on that. And I think, Chenji, I want to come to you in a second, because I think there is a special thing about pensions as well. But when it comes to people splitting up, we're obviously talking about people who are married. However, I do understand that you could be cohabiting for a period of time, and if you separate, could there still be a challenge on your assets if you let's say you've been cohabiting for 2 years and there's been contributions on both sides, because that's not going to be known in Hong Kong either.
No, really good question. So with cohabitation, there's nothing. The idea of a common law wife, that's all a myth. There's no common law wife, etc. The claims in respect of cohabitees or cohabitation, people who live together, that is a lot more complex. They will be making claims under trust law. And let's just say it's a really, really, really complex area of law, but in theory, they can still make claims towards assets that belong in another person's name, but typically it's property. So if I give you an example, under trust law, there may be a partner who, let's say the male partner purchased a property and the female partner lived there. It wasn't in her name. She contributed towards it by way of, they had children and she brought up the children. She may have paid towards a mortgage slightly. They separate. He goes, well, we're not married. The law in respect of the matrimonial clause, that didn't apply. So actually, you can't have a claim. Technically, she may have a claim under trust law. And it's all about what's called constructive trust, proprietary estoppel, resulting trust, etc. It's all about whether financially does she contribute towards the property, etc. So yes, people who live together can still have claims against the other person, regardless of the fact that they're not married. However, it is typically a claim towards things such as property.
And that's good, of course. Going back to pensions, Chenji, I remember when I was doing my training with SJP, and one of the things that we talked about was pensions, and don't get involved in pension splitting because it can be a complete nightmare. From your perspective, what should people think about in Hong Kong, whether that's a Hong Kong pension or indeed a UK pension, and potentially getting split up?
Well, so in the UK, so the UK pension and the Hong Kong pension are actually quite different. So, I want people to kind of, unlearn whatever they've learned about the pension. You think about, I retire at 65, I get an income for the rest of my life or something like this. In the UK, since 2015, it was called, there's a pension freedom was announced, and pension has effectively become a structure, a vehicle, a potentially tax efficient vehicle for you to invest. You can invest in property, commercial property, actually, not residential property. You can invest in traditional stocks and shares, or you can keep cash in there. So inside a pension, any gains are completely free of tax. And when you come to take money from the pension, that's when you become subject to income tax. So that's just kind of like to make it simple to understand. Now, a key benefit of the pension is, we talked a lot about inheritance tax today, actually, earlier on, and a benefit of the pension, which is why we do, myself as a professional financial advisor, we do like to use pensions, because a pension does not fall into your estate, which means it's outside of your estate, and therefore not subject to inheritance tax. So it is a very incredibly valuable tool for this. And in terms of the question for couples, and pension assets, now actually this is something we actually work extensively with solicitors on, because sometimes giving a bit more of your pension is beneficial, and sometimes with different scenarios, giving less of your pension away is beneficial. So there's quite a few sort of nuances in terms of how UK pensions work, which are very, very different how they work in Hong Kong. And so that's something, again, please have a Google, please just, research on this subject. And again, I'm happy to answer any questions. I think, Simon, you mentioned Hong Kong pensions too.
Indeed, I did, yes.
Yeah. So I think, what's in many, Hong Kong BNO clients of mine, and I started working with a few of them, is in Hong Kong, every person has the mandatory provident fund, which is the UK state pension. Now it is a funded pension, which means you have an allocation of part of the pot. And normally when you reach, I believe is at 65, you're entitled to take that pension. But there is a provision that says if you do permanently move abroad, you can apply for early release of your entitlement towards that pension. Now the issue is, since March 2021, so only about 2 months, after this, after the BNO visa was announced, the government said, we cannot accept a BNO passport as a way of proving that you have permanently relocated. So now this has become a big issue. This has become definitely a big issue, and no one knows what this situation will sort of develop to. But I think, this is something that Nigel, Paragon Law are actively monitoring, and, there will be ways to, to potentially have access to that pension, either in 5 or 6 years when you are thinking about applying for indefinite leave to remain or become a UK citizen. But again, yeah, I think it's a very sensitive topic at the moment too, about the mandatory provident fund.
Did you have anything more to add to that, Nigel, at all?
No, only in my understanding, yes, is that once someone has acquired evidence that they are able to live abroad other than the BNO visa, the BNO passport, then that may well solve this problem. And as Chenji said, citizenship of the UK, unless the Hong Kong authorities stop recognising UK passport, which does seem a long way off at this stage, but that may be the situation that solves the problem. Or indeed, as Chenji said, possibly indefinite leave to remain, although that may also be linked to the BNO passport until citizenship. But yes, it's something that we're watching out for. It's largely in the hands of the authorities in Hong Kong as to how they're dealing with it. But certainly it does seem as though UK citizenship, at least, potentially could solve that issue.
Perfect. Good stuff. We've got a couple of questions remaining. If you are watching this live, please do drop a comment on here, press a like to say you've enjoyed this session. subscribe to the channel so you don't miss out on any future videos when they come up for you. That would be really, really useful. So, but drop us a line, just say if you found it useful, what did you find useful? And indeed, if you've got any questions, make sure you fire those in. A couple of questions that we had was, should I keep my bank accounts in Hong Kong or close them down when I move to the UK? I have no clue on this one. So Chenji, do you want to go first, and then anyone else just put your virtual hand up?
Yeah, so interesting question. As you know, some of the clients I've started to work with have asked me this question, because some people are saying, I'm taking all of my assets out of Hong Kong and I want it to be UK close with me. Other people think, there is a possibility I might go back in a couple of years. I just don't want to lose complete ties with home. I might have relatives at home. So what's the kind of, what's the, from a financial and tax perspective, what's the implications? I would say if you're one of those people who've decided to sort of keep a bit of assets in Hong Kong, don't close it. Because the moment you've closed your bank account in Hong Kong and have, move all your money to the UK, remember inheritance tax again, you have your assets in the UK, which means in the future, if you do live here for 15 years, then that asset will become part of, your estate. Now, if it's kept in Hong Kong, then that's something you can then potentially put into an excluded property trust or do other planning with. And in addition to that, I think, Simon, you could probably add more into that. And I think it goes back to what you mentioned earlier very briefly on the remittance basis of, moving income from abroad into the UK. If you have, for example, a bank in Hong Kong that produces interest, right? And while you are a UK resident, that interest is actually potentially taxable in the UK. But, however, the UK does not tax capital. So I want people to make a distinction between income and capital. So the UK does not tax capital. So it is actually quite good practice to, if you do decide to keep a bank account open in Hong Kong, to have two accounts, one account with the capital and one account to transfer any interest that you have, that you get from the bank, be it from, if it's a cash deposit where you earn interest, or be it an investment where you receive dividends or any capital gains, and put any gains, dividends, or interest into a separate bank account and keep what we call professionally a clean fund that's purely capital. I think, again, sorry for going a bit into more technical terms, but it is actually something that it is more sophisticated than people think it is. So thank you, Simon.
Talking about assets, though, if you have got cash moving from one country to another, I'm going to let you talk about the best providers you've worked with, and I'm sure it's going to be the same. But for one thing is for sure, I bank with HSBC, is not to do any currency exchanges with HSBC. I am not pointing that bank account out just as a malice. There are other big leading banks out there, of course, but I have a great bank account relationship with HSBC, but they don't give the best currency exchange rates, and that's what all I'm talking to you about. Chenji, from your perspective, what kind of provider does give a better currency exchange rate if you are changing from Hong Kong dollars into sterling?
Yeah, I do this, I think I do this personally and professionally, like very often when I need to move, US dollars into pound sterling. I never use a bank because there's a lot of, commission that the banks charge to do this. There's various providers, it's quite a, I think for this, it's really just do a comparison. I know, for example, two out of my head, from my head that I use at the moment. One is TransferWise, not just called Wise. And the other one is called TorFX, which are also, they have more sort of professional service to help clients decide exchange rates. I work with them professionally and sometimes using personally as well. But it really is search on the open market, whatever is the best rate. Be careful of all the fine print. Don't just believe the rate itself. Always go to the summary page in the end and see if there's any additional fees that's added up, and they can really add up. So that's my advice and recommendation on this area.
Perfect. And there's one last question that nothing's come through our live feed. So the last question was around adult and junior ISAs. What are the benefits and limitations? Interesting enough, I've just been giving someone advice on junior ISAs. So Chenji, do you want to take this away?
Oh, sorry to keep on talking, actually. Sure, everyone's already annoyed at my voice. But yeah, it is, people do ask it all the time because it's one of the first things when they research, they'll look at cash ISAs, they'll look at, stocks and shares ISAs, and, even lifetime ISAs, help to buy ISAs, all there's different type of ISAs, which sounds very complicated, but it's not. The only way to, the simple way to understand is an ISA means individual savings account, which is a way of, the government of encouraging people to save money and not just spend all their money. That means any money you put that's within an ISA, again, it's a structure, it's a vehicle. Anything inside the ISA is free of income tax, capital gains tax, dividend tax. It is not free of inheritance tax, so that's one area of concern. But any other taxes, it's free of all these taxes. Which actually, I draw a comparison to Hong Kong. If you have an investment in Hong Kong, it is effectively in an ISA because there is no dividend tax in Hong Kong and there is no capital gains tax in Hong Kong. So basically, the ISA is just Hong Kong's way of taxing investments. But the limitations of it being, you can only have 20,000, you can only put £20,000 each year in total into an adult ISA and £9,000 per year into a child, or what's called a junior ISA.
Interesting point about the Hong Kong. The only difference, and I had to smile because I had this conversation again between the UK versus the US, but this is the opposite now in terms of the Hong Kong and the UK. It might be very tax efficient of having an investment in Hong Kong. However, if you are taxed on your worldwide income in the UK because you've been here for a long period of time and you don't want to use a remittance basis, all of a sudden it becomes taxable, not in Hong Kong, but in the UK. And the reason why I said that it's quite funny is because I had someone who was investing in ISAs in the UK saying, yes, I've made some advice, some tax efficient investments. And I said, well, actually, Uncle Sam across the pond still wants his tax. So I'm afraid you're going to have to get that wrapped up. So it's, you have to be a bit careful with international investments and how they are taxed unless they've got treaties to be applied. And you have to be very, very careful with that. I think that brings us to a close, and I appreciate Natalie needed to get away promptly at 6:25, and as though I've been very professional in my conduct here. So BBC, if you're watching, you know where to come. But other than that, I just want to say goodbye and thank you ever so much for your questions today. And we shall see you again soon. We won't be doing any live sessions, but fear not, we are going to be producing videos every week on a Thursday so that you can enjoy them and keep up to date with the B&O visa application, investments, mortgages, and indeed your legal planning as well from me and the rest of the panel members. Thank you ever so much for joining us. And I hope that you stay safe and stay healthy. Thank you and goodbye.